The layoffs, which the Toronto-based bank said will come through attrition as well as targeted cuts, follow similar announcements by other Canadian banks, including Royal Bank of Canada, Bank of Montreal, Bank of Nova Scotia. Employment in the industry was at its lowest since December 2022, so not a good thing that's happening there, and that's just showing you that the consumer is really, really screwed right now. They have no money, inflation has just absolutely killed them, and now you've got all the other wage pressures that are coming into the equation, like the potential of losing income, losing a job. Total hours worked was down as well. The job numbers are out for Canada, and even though the report shows little change, we've got other things that are now showing that the labor market is quickly deteriorating and the economy is quickly unraveling. So let's get into this. So Canada added 25,000 jobs last month, says StatsCan. Jobless rate ticks up to 5.8%. As you can see by this chart, this is what they're talking about there. So the unemployment rate has gone up here to 5.8%. It hasn't really moved that much, but let's talk about what is going on and the unemployment report. There's a lot to dig into in this labor market report. So employment increased in New Brunswick up 0.6% and declined in Prince Edward Island minus 1.4%. Employment was little changed in other provinces. So let's dig into the nuance of this. So the number of private sector employees rose by 38,000 in November, the first increase since June. Meanwhile, the number of self-employed workers decreased by 25,000, partly offsetting cumulative increases of 76,000, 2.9% in August and September. The number of public sector employees was little changed in November, but was up by 98,000 from June. Just think about that. That is huge, guys. When you think about that, 98,000 more public sector jobs. The government, the public sector is just getting larger and larger and larger in Canada. It's just absolutely crazy how this is happening, but this is a lot of the labor market recovery that we've seen is because of the public sector jobs that have been created, and we're becoming increasingly dependent on the government and the public sector. So employment increased by 28,000 in manufacturing in November. Sounds pretty good, right? But we're going to get onto something in a second. So employment in this sector was up by 2.4%, 43,000 on a year-over-year basis. So think about that, because now I'm going to take you over to what happened with the PMI. So this is interesting because contrast what we just read there about manufacturing jobs going up with this, which literally came out the same day. So Canada's manufacturing sector contracted for a 7th straight month in November as global industrial weakness weighed on output and new orders, and despite an increase in hiring, data showed on Friday. So they even highlight that hiring in this sector is up, but it's actually a weak sector. I think there's a lot of labor hoarding which is going on there, because a lot of these skilled workers are more difficult to find, especially in this environment where we have less and less skilled workers coming in through the immigration programs and more unskilled workers. You have more people competing for jobs at Walmart and McDonald's than ever before. You've seen the lines all over social media. So we've got all that happening. Meanwhile, in manufacturing and places like that, it's very difficult to find these skilled people. So I think there's a lot of hoarding that goes on, but the weakness in that sector through these PMI reports is much more realistic, in my opinion, to the unemployment reports that come from the government, because these data points, they don't come from the government, guys. So the S&P Global Canada Manufacturing Purchase Managers Index fell to a seasonal adjusted 47.7 in November from 48.6 in October, and I've got that right there so you can see what that looks like on a chart. We are well below where we were in 2021 and in the start of 2022, and you can see how this really dropped off towards the middle to third quarter of 2022, and that's when I said, you know, we are really in that recession, and we have been, in my opinion. That is where we entered the recession. The government's going to tell you otherwise, but that's the reality. If you pull this out, this is really low. We are heading down to the depths. I mean, we minorly missed a recession back in 2016, and they were able to lower rates to sort of recover that, even though it wasn't much of a recovery. And now we're heading back to those levels, and we're heading back with much higher interest interest rates than we had back then. So things are a lot worse than they were back then, guys, and I think you know that. So let's continue to look at this report. In construction, employment increased by 16,000, 1% in November, building on an increase of 23,000 in October, while employment declined in construction through the spring and summer of 2023. Gains in October and November brought employment levels in the sector to within 15,000 of the peak reached in January 2023. And everybody might be doing a little golf clap right now and saying, yes, this is fantastic, right? So the thing is, it depends who is actually buying the new real estate. I know in Calgary, for example, most of the people buying are just speculators. Again, we've just got speculators that have moved into this market. A lot of the growth in this sector is to do with speculation. We're obviously having the real estate bubble that is imploding nationally. So a lot of these construction jobs, I would expect, are going to unwind over the next couple of years, and you'll see that happen pretty quickly when things get really, really bad. Employment declined by 27,000 in wholesale and retail trade in November, adding to a drop of 22,000 in October. As of November, employment in the industry was at its lowest since December 2022. So not a good thing that's happening there, and that's just showing you that the consumer is really, really screwed right now. They have no money. Inflation has just absolutely killed them, and now you've got all the other wage pressures that are coming into the equation, like the potential of losing income, losing a job. Total hours worked was down as well. This, I believe, is very key. In finance, insurance, real estate, rental, and leasing, employment fell by 18,000, minus 1.3% in November. Since July, employment in this industry has declined by 63,000, minus 4.4%, the steepest decrease of any industry over the period. So obviously the real estate industry, the financing industry, which goes hand in hand with real estate, they are experiencing significant troubles, and we would expect that. And we're going to go through this, that TD is cutting more jobs than they forecast. And I think you're going to see this sort of thing continue to happen because the banks are really struggling and they're just trying to appease their investors. They don't really care about their employees. The banks are the worst for that type of thing. It just shows how weak things really are. And you know, the Canadian economy has become so dependent on real estate. You know that when real estate is in trouble, that's going to eventually feed into everything else. It's just that people might not necessarily have noticed. So it's interesting what's going on there. And then I wanted to just briefly touch on this because this is kind of important. The share of workers who work exclusively from home has gradually declined since the winter of 2022, falling from 24.3% in January 2022 to 12.6% in November 2023. So if you're wondering why the traffic on the roads has gone up significantly over the past year, there's the answer to that question there. A lot less people are now working from home. Remember when they said everybody's going to be working from home and that's going to continue forever, and all these people were buying real estate and thinking that they were just going to be working from home forever? Well, that isn't lasting. So there's a lot of those people who are trying to sell and move back to the city and get closer to the office again. And guess what? They can't. They turn these housing markets into penny stocks. If you remember and you follow this channel for a long time, I said that's essentially what they've done in these small little markets where they flooded into these markets, drove up the prices massively. None of the locals could afford to buy, but all the locals had bought at way lower prices than they had. So it's essentially leading to massive price declines in certain areas, especially across Ontario and British Columbia, where you saw those massive rises, and you also saw a lot of Airbnb speculation in certain areas as well. So these housing markets are being impacted massively, and it's important to note this of what's going on with remote work. So the share of workers with hybrid arrangements has more than tripled since January 2022, rising from 3.6% to 11.7% in November 2023. But that is remarkably different to just working from home, and I think a lot of you on this channel realize that. If you're having to go to the office even 2 times a week, that's going to be a lot different to not going to the office at all, especially if you've moved somewhere else. So I think it's very important to note what's going on there with that. And then just to go back to the PMI, which we touched on earlier, you know, a reading below 50 indicates contraction in the sector, but this is the longest period that the PMI has been below 50 since 2016, which was back back here. And remember, they cut rates, guys. They actually cut interest rates, and it was a different environment back then. But right now, they're holding interest rates high. They're being very hawkish, right? So what is that going to mean? Now, I want to quickly, before we get onto the TD and what's happening there at TD Bank, they're cutting more jobs. I want to talk about this because this is really interesting. Canada expects unemployment to rise 211,000 within months, mostly immigrants. So obviously we know if the government is expecting something, it's going to be worse than that. But anyway, unemployment is forecast to rise by hundreds of thousands of people in just a few months, primarily impacting recent immigrants, at least according to them. The economic statement's unemployment forecast shows an increase of 0.8% to 6.5% by Q2 2024. So do you think that the government is going to be right, or do you think they're going to be way offside on that and unemployment is going to be much, much higher? Let me know in the comments. I'll be interested to hear. The interesting thing about this, and we're really doing a disservice as well to all those people moving here, is the fact that they're just continuing this immigration plan, which just proves that it has nothing to do with economics. There is something else driving this, and it is really, really sad to see, because a lot of the people caught up in this moving to Canada are going to be unemployed. They're going straight into that depression. You know, they're trying to find housing, all these different things at the peak of a housing crisis. So it's a real bad situation for these people to come into, and it's a complete disservice. And I think we should be pausing immigration right now. We don't need lots of people flooding into the country when you haven't got the economy to support that. Does Canada need immigration long term? Of course, but the reality is we don't need immigration right now. We need the complete opposite of that, in fact. What's happening right now is just really stupid, and I think it's blatantly obvious for people to realize that. But, you know, the government just continues to push on because this government just is stupid, and we know that. So these are the projections that they've put out for where unemployment is going to be. You can see it's going to be at this 6.5 level right here. The current rate is actually at 5.8%. This is obviously put out before the unemployment report came out. So basically you can see these are the prior numbers from prior recessions. So you can see 1992 was 11.7%, 1982 13%, 2009 8.7%, 2020 13.4%. And I'd like to highlight this one because this really shows the leverage in the system, I think, because so many people laid off workers, and they were so quick to lay off workers in Canada because they're so leveraged. There's so much private business debt, and that's what a lot of people don't talk about or realize. So it's interesting anyway. So let's talk about this. TD cuts thousands of jobs, takes restructuring charge as earnings missed. TD cutting 3,000 jobs, sets aside more money than forecast for potentially souring loans. So not a good thing when you have banks doing this, obviously. Why would they be doing this? I thought these loans were amazing. Toronto Dominion Bank also warned that it will be challenging for the bank to meet its median-term earnings targets for fiscal 2024. Oh, that's good. So we're not even in 2024, and they're already saying we're not going to meet those targets. The layoffs, which the Toronto-based bank said will come through attrition as well as targeted cuts, follow similar announcements by other Canadian banks, including Royal Bank of Canada, Bank of Montreal, Bank of Nova Scotia. Toronto Dominion's workforce reduction would amount to more than 3,000 positions. On a pre-tax basis, Toronto Dominion said that it expects the restructuring process to generate $400 million in savings in the current fiscal year and $600 million annually. So there you go. I mean, not a good thing that's going on in the Canadian economy when you've got banks that are laying people off, when you've got the manufacturing PMI that is dropping through the floor and holding there, and you've also got manufacturing jobs that have increased so much, it puts a lot of those jobs at risk, in my opinion. You got the labor market, which is not really doing a lot right now. We'll continue to monitor the government's manipulated information on that. Anyway, I want to thank you so much for watching. If you've enjoyed this video, you might like this video here. You might like this playlist here. If you're looking for a VPN to get around Justin Trudeau's censorship laws, go to expressvpn.com/marketmania for the best deal on the best VPN. I will see you in the next one. Take care, guys. Bye-bye.